to another fantastic and exciting panel for the Tokenize This conference. This is the RWA Blockchain Adoption panel. We're joined by Avalanche. We're joined by Hyperledger. We're joined by Stellar. We have Polygon, and we have Coinbase joining us shortly. So thank you all for coming on. I am very excited for this panel. I think it's something that a lot of people are looking forward to. It's definitely something that's been requested. So without further ado, let's get into some introductions. Morgan, why don't you kick us off?
Sure. I'm Morgan Krupetsky, Director of Institutional and Capital Markets Business Development at Avalanche. And I just realized I don't have my little descriptor on the bottom, so I apologize for that. But in my role, I really kind of partner with the whole spectrum of financial services institutions, from banks to asset managers, hedge funds, private equity and credit firms, venture funds, and then on the other side of the spectrum, the more kind of crypto native liquid token funds, as they deploy capital into Avalanche and different companies building on it, as they use the various applications built on Avalanche, or as they actually build different applications and use cases themselves on the Avalanche blockchain. It's great to be here.
All righty, fantastic. Colin, why don't you go next?
First off, Jason, thank you so much for having me. I'm Colin Butler, Global Head of Institutional Capital at Polygon Labs. Polygon can be thought of as an Ethereum scaling solution. Look forward to the panel.
Great. Daniela?
I'm Daniela Barbosa. I'm the Executive Director of the Hyperledger Foundation. And thank you, Jason, and the rest of the team there. I think the work that the security token market reports are doing are really helpful in the description and the definition of what this market really does. We really appreciate that. I have been the Executive Director of the Hyperledger Foundation since 2021, but been here at the Hyperledger project since 2017. And for those of you who don't know Hyperledger Foundation, we're part of the Linux Foundation, which is for the last 25 years really been the home for open source code projects, including obviously the Linux kernel, but Kubernetes and cloud computing, PyTorch and AI, newer projects like the Open Wallet Foundation. And these are all open source and openly developed communities building core code projects that are implemented in large institutional organizations. Hyperledger since 2016 has been the home for blockchain and blockchain-related projects. And today we have 13 different projects and 50 different labs that really address what the need for blockchain and tokenization is at the enterprise level, and the ability to have these code projects that are really not just open source, but openly developed with communities as global communities as we continue to grow. So I'm very excited about joining this panel today and talking about some of the work that our community is doing. So thank you.
Absolutely. Thanks for joining us. And Rob, certainly, last but not least, give us your intro and what Stellar's doing.
Yeah, even though I come last, I need to reemphasize the congratulations for what STM is doing, and particularly for this conference. I've been seeing the lineup, and it's very exciting to see all those players coming together on this, very promising topic for the next, decade or so regarding tokenizing assets. So I'm on the partnership side at the Stellar Foundation, specifically focused on what we call tier one assets. So regulated assets issued or managed by regulated entities worldwide. And we do have a dedicated team to support those partners. Some of them speaking tomorrow, like Franklin Templeton and Wisdom Tree. Others that engage with the foundation to kind of help them assess if Stellar is the best option or one of the best options, and how to kick off the project. So it's a multitude of people, from lawyers that you would assume, project managers, developers, and partnerships folks to try to grow that portfolio. So very happy to be here. Before blockchain, I was on TradFi as well, so more than 15 years in banking. So it's kind of easy to be on both sides of the table here as we talk about the projects that we want to get done.
Very cool. Well, we're excited to see that perspective as well on both sides. Well, we see a comment already in the Q&A from Jamie. Avalanche and Polygon, go at it, fight. This is meant to be more of a collaborative. We're trying to learn from each other here, but I do encourage some friendly competition as well. But before we get into any of that, anything blockchain specific, let's go a little bit more agnostic. Crypto and NFTs certainly are fun. They definitely have their own use cases, but how does blockchain affect real world assets?
I'll take that, because, we here at the Hyperledger Foundation, our community has been working on all the boring stuff for the last, 8 years. And a lot of the, tokenization projects out there are things that are not sexy. They're not, big splash headlines. It's really about creating efficiencies in the markets, efficiencies in markets that now need to be 24/7, whether it's supply chain or trade finance, or obviously just moving money and value across countries, whether it's central bank digital currencies or other types of platforms. We're seeing a huge amount of ROI after many years of work. And remember, these are enterprise systems. It is a big digitalization thing. It's not just about, hey, we got a blockchain, we're going to put our assets on a blockchain and make it work. These enterprises, these multinational companies, financial infrastructure that has regulatory requirements behind it, it is not fast moving. Roberto said 10 years, some will even venture to say it's going to be more than 10 years. People ask me all the time, when is blockchain going to be a thing? It is a thing. And we're seeing huge amounts of reports coming out over the last 13 years around that efficiency in the markets. Things like dispute regulation, resolution for these large, trade finance systems where they're, down to like 70% of disputes in their trade network. That is a huge amount of savings, not only in time, but once again, in people, resources that they need to do. We're seeing, supplier onboarding and in trade networks where the reduction is, over 1.5 million. And all these case studies are on our website. If you go to hyperledger.org with these ROI numbers, where, over $1.5 million of revenue are being saved per year in just supplier onboarding for, companies and ecosystems. And that's not, people don't think that's sexy and fun, like we don't have panels about this stuff. But the reality is the technology and the implementations of the technology in real world assets and real world use cases are there. They're providing value. And certainly a lot of them are being powered with Hyperledger open source projects worldwide, and happy, later to talk about some of those. But that's our perspective. We're a long way off. But it's very exciting and there's real value here. And the companies now get it, right? And you see them over and over. Last comment on this, last year when FTX failed, right? It was fraud. It had nothing to do with blockchain. What did you see? You saw all the big financial banks and all at the C-level suite coming out and saying, hey, it is not about the technology, right? This was not about the technology. We have projects. We have had projects for a while. We're doing this work. And I think that's what is exciting. We keep getting one step back, but 15 steps forward. So it's great time to be in the industry for sure.
Yeah, and I can take a segue here, just trying to materialize some of the examples that we've been coming across where real world assets have been bringing practical benefits to people, starting from the very basics. My name kind of give it away in my accent. I'm from Brazil. I do travel a lot to Argentina, Brazil, and some of our Latin American countries where we have presence with partners. Just by growing in the 80s and 90s there, or even today, to be honest, for you to be able to have access to a more stable currency just for the sake of protecting your wealth or just making sure that you get some sort of reserve of wealth, it's very challenging due to regulatory and technological aspects. A lot have evolved, so I don't want to be dating back to the 90s, but even today, for you to hold dollars in Brazil, for example, it has to be through a regulated fund with administration fees and some sort of prerequisite on a KYC perspective. The same in Argentina, right? And with stable coins like USDC, Paxos and others, you would be able, and there's people doing that on wallets on Stellar, and pretty sure doing that on other of our colleagues' platforms here. So I think that the just very simple use cases that are not available to many emerging countries and some geographies, even positioning yourself on equities, on companies that everybody heard about, like Tesla, Apple, and others, but you don't have access to those shares, right? Unless you're really a big investor or a client of a multinational bank. So those things can be quite easily enabled through blockchain and tokenization of real world assets.
I think people, like to your point, Roberto, I think people a lot of times take for granted just how impactful just the growth of stablecoins has been, and kind of not just giving historically those who maybe haven't had ready access to it, but just even the atomic settlement and swapping of these things, not only what that means just for retail use cases, but even wholesale banking use cases, and enabling the atomic swapping of two currencies, which in turn reduces counterparty credit risk and opens up kind of all this historically trapped capital that's trapped as a result of collateral and initial margin. Like, these are all the things, Danielle, that you were saying that were the unsexy things. But I think part of it is those are the things that we saw maybe weren't working that great when we were in TradFi. And the things that, at least for us, kind of get us out of bed every morning is kind of operationalizing these things, where for the end investor, oftentimes they don't know or frankly shouldn't know that they're using blockchain rails or a tokenization wrapper, but it's the thing that basically enables them to have access to something that historically they didn't have access to, or a better user experience, or a lower cost of capital or a higher return. Because certain third-party service providers and intermediaries aren't necessarily necessary in those cases. These are kind of, the real-world things that I think span the spectrum from retail end users all the way to institutional end users.
Absolutely. Lots of different perspectives here for sure. Roberto, I'm really interested in, what you have to say for this next question that came in the chat, because I identify with it too. The other portion is, remittance payments. We've seen those be quite expensive over the years. And for some people, it may not make a difference for those sending, but maybe for those receiving, it does. And that kind of aligns with this next question from the chat, which is, can you speak on the partnership with MoneyGram and Stellar? Also, can you talk about some of the projects that are tokenized on Stellar?
Yeah, it will be hard to keep that short, but I'll do my best. I think with MoneyGram, this was kind of a natural progression of what Stellar has been doing since 2014. So I think the first use case that really struck our community was cross-border payments, and especially for retail and just to make it less painful for people to remit funds to their families. So we started with smaller players because we were a small player. And as we learn and improve our features and we invested a lot on KYC and interoperability capabilities on top of the Stellar protocol, that kind of triggered the attention of bigger players. And MoneyGram was the one that ultimately, for multiple reasons, we landed on a bigger partnership. It started with the idea that any agent on the MoneyGram network, which is roughly 330,000 agents across 170 countries, but it might be off by a few countries or agents, is that you could use any wallet that operates on top of Stellar and call their API to use geolocation, give them a PIN on basically the teller of the mom and pop shop, and either give cash in whatever currency you're in the country, and you get deposited the converted USDC to your non-custodial wallet. And the flip side, right? You would be able to get your USDC from, Coinbase, Kraken, wherever you purchase it, sent to a non-custodial wallet, and then cash it out through MoneyGram. So the first idea here was just to increase the footprint, right? Like, a lot of arguments on why blockchain is not mainstream is the lack of accessibility to the everyday person. So that was the barrier that we were trying to overcome there. Now we're gradually increasing that portfolio with MoneyGram with their own wallet, and then turning this as a potential crypto Venmo, right? Just allowing people to pay to each other cross-border, real-time, using a wallet. And we want to come a time where people don't even realize there's blockchain behind these things, right? Like, it's just operating in a seamless and convenient way, but leveraging from the brick and mortar infrastructure that has been built, right? We should minimize that. So that's the MoneyGram aspect there. About other projects, I think I could maybe park it for later, but WisdomTree and Franklin Templeton has been the two biggest one regarding tokenizing actually securities and stable coins on and commodities. To be honest, there's quite of a breadth of portfolio here on Stellar, but it's still early stages for us to test the adoption and the features there. And I'm happy to share that there are many banks from Europe and North America in the process of testing tokenizing regulated assets on Stellar as well. So yeah, I'll pause there, but there's a lot of exciting stuff, and I'm sure my colleagues also have a similar pipeline. So happy to hear.
100%. Thank you for that, Rob. I do want to steer back the conversation back to tokenized RWA. So that's a great segue. But before we do, we want to welcome Anthony Bassili from Coinbase. Thanks for joining us, Anthony. Can you kindly give us an introduction to yourself and what you're working on?
Hi, everyone. Thanks for waiting on me. I'm sorry I'm late, but glad I made it in via mobile. So I'm Anthony Bassili at Coinbase Institutional, and I lead a number of different businesses, but one of them in particular that's relevant to tokenization and real-world assets is called On-Chain Solutions, and it's a newer effort here at Coinbase that we put together that kind of brings together our institutional business and our support for multiple networks, including our partners here on the phone, but also Base being our newest blockchain that we've launched as well. And so the way that we're focused on tokenization today is a lot of folks start with Coinbase and they start with the wallet and they're looking for a network, place to list their products, to use smart contract composability. They're looking for apps to be able to utilize the power of their products to come on chain. And so, for Coinbase, we kind of hit this point as a firm where scaling becomes incrementally harder the bigger you get in terms of launching new products. And we want to make sure we're doing our part to bring what we vocalize as the next billion users on chain. So, to do that, we thought launching, Base as a blockchain would be a natural evolution and kind of bringing users who are already in the Coinbase ecosystem and are already part of that early on-ramp into engaging in digital assets to come on chain and start to engage in products on chain. And so our focus is holistically today, bringing users on chain to have them engage in open finance, Web3 ecosystems, Base, Avalanche, Polygon, other networks included. So on-chain solutions kind of brings the full infrastructure layer of Coinbase together. So that's Coinbase custody, Coinbase wallet, our relationship with Circle on USDC as a liquidity instrument, across multiple networks now. Our footprint globally, having fiat on-ramps and off-ramps in, more than 80 different countries around the world. And a lot of that infrastructure are things that folks kind of have to put together themselves with different players, right? And that's actually pretty hard. So the early adopters have pursued that and put together their own, call it vertical tech stack. Our approach today is actually to bring that vertical tech stack together as much as we can through bringing a solutions-oriented product set to our clients. So that's what we're doing today. And now we're focused on real-world assets as a component of the things we want to bring onto Base and other networks as well. So this isn't for Coinbase just a tokenization real-world assets theme. For us, it's broadly across all on-chain categories. But certainly the addressable TAM, the amount of impact we can have on the financial system within tokenization and real-world assets is a really important objective for us. So glad to be here. And I'm sorry I missed the intros earlier.
Not a problem. Thanks for joining and for that intro. And before we actually go into some of the institutional questions I did have on RWAs, I did want to ask, you brought this up, Anthony, is bringing on more users on chain, right? I want to hear what each of you is doing to, help onboard people, educate them about, how do you use a blockchain? How do you create a wallet? Morgan, you previously talked about how maybe sometimes you don't even have to experience, such a complex, situation. You could make it a little bit more person friendly, if you will. So Anthony, let's kick it off with you actually, and then maybe I want to hear from the rest of you as well. But Anthony, when you guys launched Base, you guys had on-chain summer. Talk to us a little bit about what that was and how did that, generate people to come on to Base.
Yeah, so I'll speak to it so On-Chain Summer was certainly a really exciting endeavor that Coinbase put together. And a lot of that was about creating excitement, for folks to know that Base is a new chain that's out there that people should go on and explore. And we launched with dozens of apps on day one that were doing all kinds of things from traditional DeFi to NFTs. One of the exciting applications that really took off, which is really great to see, was Friend Tech, which is one of those examples of you don't really know which app is going to catch the wave, right? Like really get people excited about using it. But the way that Friend Tech integrated Base as a blockchain solution, but had a really seamless consumer experience for users in the app, for what we consider maybe as the future of kind of social networking, that really kind of set the tone for the power of using scalable backend blockchain technology with a front-end, easy-to-use consumer interface, right? So On-Chain Summer was all about activating our customers to be able to go on chain and do so safely. And so it was actually really easy to go into the Coinbase wallet and then kind of navigate over to Base and move your Ethereum over and start to engage in different apps on chain. That's now ended. We're now in maybe it's on chain fall, and we've kind of shifted to really focusing on that core group of applications that are building and that want to come onto the Base network today for Base in particular. And for tokenization in particular, this is actually a much more institutional conversation. And so, something like an on-chain summer is really interesting for the retail audience who finds it easy to bring crypto on-chain and navigate with crypto apps. For an institution who's looking to bring traditional registered products, for example, on chain, there's a number of different layers of complexity around licenses, regulations, compliance, KYC, permissioning that you have to answer, around tooling as well. That becomes really important around safety and security of your assets and ability to scale that across a large enterprise. So the way that we're, to answer the question, the way that we're helping our clients on the institutional side to navigate this is through this effort of on-chain solutions, right? Where we in our institutional business are taking a kind of multi-network approach, right? Where we say, we've got a modular tech stack. You can use wallet, you can use custody, you can use USDC, fiat rails, et cetera, and utilize those to simplify the process to navigate around different networks, around different tokenized products, and bring those on chain. There's a lot of folks that are which are joining us on this call on different panels that already have different pieces of a tech stack as well. And so you're gonna bring a lot of this stuff together to create the full end-to-end seamless solution for tokenized assets on chain.
Very well. Yeah, it's the two sides, right? You have the retail investors that may want to come on board, but you do have to provide tools for the institutions to also want to come on board. We've seen headlines come out. Sometimes they're just headlines. Other times they're actually building stuff. They're actually tokenizing assets and deploying them. So I want to hear more about your perspective from each of you on, what are the biggest asset use cases that you guys have seen, and what tools are you providing to further onboard institutions into this realm?
Yeah, I can chime in, and as I think I relate to a lot of what Anthony said between the retail and the institutional relationship. It's very different. That's why we kind of split the folks within Stellar talking to those partners and fintechs, just because on the retail side, there's a lot on the user journey, wallet, UX, speed. And on the institutional side, it's a very different conversation. You usually get lawyers in the room right in the beginning of the meetings, and we talk about regulations and things like that. So I think we're learning through this process, as I'm assuming all of us are. But one thing that's helped us a lot to help those bigger institutional regulated partners that want to really do something is to have a functioning sandbox. So we actually have two sandboxes. We have one custodial and one non-custodial, and you can literally issue a stable coin or a smart contract and play around with controls, parameters, KYC. And that is something that is quite stable for you to demo to your own management committee, steering committee to potentially approve a POC becoming a pilot. The second part is just making sure that we have most, if not all, the basic features that you would need for a regulated asset built into the protocol. So try to depend less on additional layers of logic, so you get it more performative and more trustworthy from a code perspective, because the protocol has been audited many times. So if you think about things like clawback, freezing, whitelisting, blacklisting, external authorization, multi-signature, that's all been built into the core of the protocol. Therefore, people know that it's been audited many times, as the protocol has been tested by thousands of assets at this point. So those are things that have been helping. And we're learning to even help partners talk to regulators. We're not giving legal advice. We're not joining those meetings. But because we've been in many conversations, at some point we kind of anticipate what questions are going to be asked and why, to a certain extent, we think Stellar has some of the features that would appease and please the regulator on what concern a regulated asset being issued on chain.
I know we're supposed to fight, but I agree with everything that everyone has said.
They're supposed to fight.
I was also just going to say, it's funny. One time someone asked me, they're like, how do you convince banks to use blockchain? And I'm like, I don't, because we have enough institutional partners at this point who are like far enough along in their journeys and who have been progressive enough in the space and in tokenization that there's relatively lower hanging fruit to kind of focus and hone in on. I think a lot of the work that we've been doing with our institutional partners, particularly as they build on Avalanche subnets or custom blockchains in the first instance, is a lot of education around how our solution effectively gives enterprises and institutions the best of both public blockchain development infrastructure, DeFi innovation, robust developer communities, as well as the controls and the idea of owning your end-to-end blockchain environment that have historically driven them to launch on what we would call enterprise blockchains. And I'm sorry, Daniela, you represent Hyperledger. But in this way, a lot of institutions are kind of looking at subnets as like a stepping stone into the public domain, while still enabling themselves to consider and meet internal and industry-wide regulations and other types of considerations. I think similar also to what Anthony and Roberto were saying. I think from an L1 business development perspective, we spend a lot of time ensuring that we have the right kind of institutional grade infrastructure integrated with our protocol to ensure kind of fully end-to-end tokenization solutions and strategies operationalized for institutional partners. So things like not only the applications, but also dev shops and requisite support, custodians, digital transfer agents, wallets, stablecoins, all of these things that when you put all the pieces together kind of really help institutions, operationalize their tokenization use cases. And then the last thing I would just say is from our perspective, there's a lot of us that come from the traditional financial services space. So over time, we ultimately form like trusted advisor relationships with a lot of our institutional partners where, we help them kind of get through internal and external stakeholder governance and approval processes, help them get regulatory approvals, help them position their business cases in a way that resonates with their businesses respectively, and helps them kind of in turn address any blockers that they may have along the way. So I think between the tech side as well as the kind of trusted advisor side, that's the way that we've really been partnering with our institutional partners.
Yeah, Jason, you're going to be super disappointed in this conversation in particular. Unfortunately, because I also have to agree with Roberto and Morgan. If you're thinking about the institutional conversation, they're not coming in at the 101 level, they're coming in at like the 401 level. And they really want to understand how they can participate in essentially the rewiring of the global financial system. And that is what's happening at 1,000 miles an hour right now. Like literally the 4 other panelists on this call are literally the busiest people in crypto. Like if this is a bear market, I do not want to see what a bull market looks like for the folks on this call, because none of us would survive. Like we all could work weekends. I could work 24 hours a day.
We don't want a bull market though, to be clear.
Oh, that's true, by the way. We do want a bull market. Just I don't want to misphrase. But what it looks like to me is the numbers that, for years, and I got to give a lot of respect to the people that have been working on this for years and years, including president of Avalanche, John Wu, right? So you can look at his old kind of webinars and podcasts. They'll talk about these massive trillions of dollars coming on chain. And I see it happening. Like I see this as the inflection point. It's happening right now. HSBC is going to say 19 trillion by 2030, whatever it is. The second worst part about this conversation, it is the unsexy part of probably the whole conference, because what's happening is it's the rewiring of the basement. It's the back office. And so nobody's really talking about it. The public's not aware of it, but it's going to change the whole landscape because of 3 major things. 1, cost savings at the banks, large investment managers. 2, increase in revenue. And 3, de-risking of the system. And then you add things like, fractionalization and 24/7 trading, the ability to use collateral. Like everybody on this call is going to the same place. And here's where I may say something controversial. It's probably the only controversial bone I have in my body for this call, is that we're probably all going to wind up working on it together, because you can't have fragmented liquidity when you're attacking 8 billion users. Like they're not going to be like, oh, but I'm going over to the Stellar blockchain to move my assets today. Like that's absolutely not the user experience that any of us could ever engender. So over time, we're going to develop the technology, and it's ultimately going to be all through connectivity. Our version of that, here's maybe the controversial +1, is our view at Polygon is that it's based on zero knowledge in the future. So the whole industry over time, I think, probably coalesces around that idea as the highest in security in order for us to be all interoperable. But that's also TBD, right? The industry changes minute by minute. But Polygon spent $1 billion on that technology. So that's our vision for the future. And quite frankly, we're looking to work with everybody on this call to contribute to the blockchain future in whatever form that is. But for now, for us, I think we're going to be kind of leaning into that as a way to bring everybody together in an interoperable fashion that's highly secure, that does support the mandate for all the institutions that we're all here to service.
And I'll add, Morgan, you don't need to apologize about enterprise blockchain, and the definition itself needs to be relooked at, right? What it really means, because the reason that you are all walking into those rooms and they have institutional knowledge about what blockchain and what the technology itself does, that 4.0 knowledge, is because they have been involved in enterprise blockchain use cases. And today, at the Hyperledger Foundation, we've actually, grown the types of projects that we have. For example, Hyperledger Besu, which is an Ethereum virtual machine. It's been in the foundation since 2019. It has a very healthy ecosystem, both on the permissioned blockchain side. We saw recent announcements like the City Token Services that is on Hyperledger Besu. Some of the largest central bank digital currency projects are using Hyperledger Besu. What's unique about this community and the work that they're doing is that it's enterprise grade. They're focused on building enterprise grade solutions to bring to the market that are secure, that have, multi-vendor support within the ecosystem, but very importantly, that are starting to meet the needs of the enterprises today and in the future. So Besu, just as an example, actually is an execution client on mainnet, on Ethereum mainnet as well, right? And there's a lot of interoperability work happening today in the foundation that is supporting interoperability between permissioned, pure permission networks, public networks, and obviously, and all of you, minus Coinbase, I don't think we're there yet, with projects like Firefly, for example, that support Avalanche, that support Polygon, that support Stellar, that support all the permissions. So I think, the reason that we're here, when we all feel we're here, and that we could talk about the plumbing, Colin, I call it the plumbing, like it's the plumbing of the new financial infrastructure. And what we're excited, because when we all got involved in this, and at least myself in 2016, I was most excited about the fact that I knew that financial systems, I was at Dow Jones for 17 years, were going to be rebuilt, and I wanted to be part of it. I wanted to also have like this opportunity to do it in the open, to do it collaboratively, right? And that's so that what Hyperledger brings to the market is we're coalescing these users. For example, we're having a workshop in early November where we're bringing the banks and financial services to talk together about what they need these protocols to do, right? What are they building and how do they need it? So collaboration is so essential now. Fights are great, and I love panels when people are fighting over things, but I think we're all in agreement, right? We all need to work together. It is not going to be one blockchain to rule them all. It's a known fact. Maybe in 2016, you could have convinced me that might have been the case, but that's no longer going to be the case.
I'm glad to hear
just
that.
a quick note. Just a quick note. I think for the audience and whatever legacy we're leaving from this panel, the collaboration is much more constructive. I know that the argument sometimes is exciting, but the pie is growing so fast that I think we don't want to steal anybody's piece. We want to make us to work together. I think the comment that the banks are not coming one-to-one, they're coming one-to-many, and therefore they want to feel the confidence of getting similar answers from different protocols. I think it's very strong. And there's been a lot of attempts of doing multi-layer solutions. For example, in Brazil, where I come from, Hyperledger Besu is being part of the CBDC solution with a layer 2 on permissionless chains. And then, we need to work together to make sure we're using the same terminology and we're thinking about sharing liquidity. So that gets me much more excited than actually bumping heads, to be honest.
I'm so glad that this is the sentiment. As I said in the beginning of this webinar, we're here to collaborate. We're here to learn from each other. Obviously, you guys all have different levels of experience or narratives based on the conversations you're having. So, Jamie in the audience, sorry, man, but you didn't get your fight.
Just reading his comments.
But it's always fun, nonetheless. And we've seen tokenized assets go on, the same asset on multiple chains, right? Which is really cool. So let's shift it back to the real world assets. You're all working with them. You're all doing something. Is there a common issuer theme? Is it private equity? Is it private credit? Or, what's it look like? What are some of the key themes that you're seeing from the people that you're either working with or that have issued on your blockchains?
Jason, I'll start, and because mine will be the shortest, because we're the new kids on the block here. So we just went live with. So I'd say the theme is treasuries on chain. It's yield on chain for digitally native users, right? So users are accessing tokenized treasuries, tokenized money funds, types of products to make sure that they're capturing yield for as close to risk-free as possible. In different ways that they can get it. So there's a lot of different versions of this happening across multiple different networks. And, we just launched with Backed just earlier this week, our first, tokenized treasury on the Base network issued out of Switzerland under the Swiss DLT regime. I think we're the 7th chain in that launching sequence, right? So to your point about kind of cross issuance across different networks, right? You're certainly seeing that play out, which I think is fascinating and really interesting to watch, just to see how users gravitate towards a product across multiple networks. And that's a concept that I don't think really exists in TradFi. Right. In the closed loop systems of TradFi, you have, one firm that makes products available to their customers, and you don't get that level of interoperability or maybe choice, right? So to speak, for most participants. With this stuff being on chain, anybody can come from any network, right, in their wallet and connect to their chosen network, their network of choice, and access a product. So that just launched this week. We've got an interesting pipeline of things across different asset classes. I spent the formative part of my career in the buy side and managing large institutional portfolios for our clients. Portfolio construction is difficult. My vision is that portfolio construction happens in the wallet, and it'll be really easy to navigate from product to product across networks. Maybe the networks themselves get abstracted away at some point, to Colin's point earlier. But I'd say most of the focus today is tokenized treasuries, making that particular product segment work. And we're retooling it in a lot of different ways across different networks and different regulatory regimes, so that the market's getting pretty smart about how to capitalize on that one product segment. The rest of the stuff feels really POC to me. I'll open it up to everyone else.
I was just going to say, Anthony, I think there's about 30 tokenized T-bill and money market fund teams that we've met with over the course of the past year. So yeah, I think a lot of them in the first instance, a lot of those teams from a go-to-market strategy perspective are trying to hone in on crypto natives as a way to kind of diversify exposure to non-yield bearing stablecoins. I think that part is still trying to be figured out in terms of what the product market fit might look there. But I think to the extent that those tokens can generate greater utility, I think the better. But definitely many focused on tokenized T-bills and money market funds, as well as different types of stablecoins. On the other end of the spectrum, I would say, in terms of what we're seeing, is really focused on alternative assets and private market securities, whether it's private equity, credit, infrastructure, real estate. And that really is a very big focus, actually, for both individual protocols as well as for large institutions. And I think part of the reasoning behind that is just that that's the area that's the least standardized from an administration perspective, as well as the most operationally intensive, and therefore probably the one that stands to benefit the most in the first instance from putting fund admin accounting, reporting, and other things on chain to kind of make lower deal sizes and lower investment minimums economically viable for GPs. And then at some point, I think there's general consensus that everything's going to be tokenized or every security is going to be tokenized. But in the first instance, I'm kind of seeing thematically focused on the extremes from a liquidity perspective.
Yeah, I think just to add a little bit to what Morgan said, if you look at what KKR and Hamilton Lane did on Securitize, I think that's a typical example of things that are coming first because there's a large use case. And in both of those cases, that would be an increase in distribution, right? It's like the idea that you can lower minimums and get to a wider cross-section of people globally. It broadens ultimately your distribution and increases your revenue. So you start with kind of the simple, obvious, low-hanging fruit, like massive increase from the prior solution, for whoever the product creator is. And then eventually on the other end of the spectrum, you get to like equities, which are already very efficient. I would say there's a much tougher argument that blockchain is going to significantly help that space. But somewhere in between, call it private equity and funds, which is what we're really seeing now, and disrupting equity markets or the plumbing of the equity markets, there's going to be like structured products, there's going to be bonds somewhere in there, derivatives, the things that may trade every once in a blue moon or would benefit a lot from blockchain. Those are the ones that are going to be first. And I think, again, with what Avalanche did in Securitize with KKR, like that was really kind of the first mover in that space. And then from there, there's kind of a spectrum going into the future.
Yeah, and I'll add, from concerns from, interoperability. And, I do think that a lot of the reasons, and I don't know who said it, about POCs, a lot of the reason that a lot of this work is still in POC stages is that, it's a big commitment to select one protocol, one, format, and how do they go about doing that. So I think interoperability and making sure that there's interoperability that is not about creating connections between everything that needs to get done, but more, and we have a project called Hyperledger Cacti that's addressing this more as as an SDK of SDKs, right? You're not building every time you need to connect into a new protocol. You're not building a new plugin. You're just using what's available there. So we're hearing very much across the world that interoperability and making sure that if they make a selection, that it's going to be a long time, infrastructure selection, that it's going to be able to, to be used for a long time, because these are costly. All of us who've been in the other side, we know these are very costly, not only to build, but to maintain. And the technical debt that comes with making the wrong decision is not taken lightly at these organizations, for sure.
And just a quick note, I think there's always what's next, but there's a lot to be done on what's present. I think the stable coin and the treasury tokenization, there's still a lot to be done in the sense of getting access to people that don't have access right now and might benefit from it. So if you think the dollar, the euro, other global reserve currencies, that is a form of hedging wealth, and it's not easily accessible in many wallets and layer ones, and the treasury tokenization, I think, also connects to that idea, right? It tends to be a safer investment. It is pegged or close to a currency, and you got the safety of earning some yield. So I think there's a lot to be done there on the accessibility, on the interoperability, as Daniela said, and we're working still very hard on those present use cases while we look a bit into the future. I think into the future, real estate has come a lot to us. Real estate funds is something that folks are talking as more of a barrier to entry portfolio that could become simpler as you tokenize it. And one that I'm particularly excited is just exposing emerging countries to S&P 500 and Fortune companies that are, harder to access as you're in other jurisdictions, right?
Absolutely. We're almost at time here. So I do want to thank all of you for, sharing all of your insights with the audience, with myself and with each other. So I'll give you a last chance to, go ahead and share any last minute words. Otherwise, we do have the next panel starting in a minute.
I just want to encourage everyone who's, over the years heard about Hyperledger to take a new look at what's happening within the foundation and to join us to really, help build this new infrastructure and these new solutions in the market. And I think that, open source and open development and really collaborating together is what we've been doing here at the Linux Foundation for the last 25 years. And it's going to be critical to getting these technologies across everyone here today, and even more into these firms and into governments as well. So thank you for having us.
Yeah, similarly, we've done some work. Very quickly, we've done some work reorganizing our content and brand as well on the Stellar side. So I encourage people to visit us as well. And particularly on the logic layer, we're launching our smart contract platform called Sorobun. So hopefully that's something that will spark additional interest.
Yeah, the only takeaway that I would leave the audience with is the future is interoperable, and it's coming a lot faster than you think. So Jason, thank you so much for hosting. It's been a pleasure.
Thanks, Jason.
Thanks for joining.
Thanks,
Absolutely.
Jason.
Thank you all. All right. See you, everyone. We'll give us a couple minutes to transition sessions here, and we'll see you on the next one.